Okay, hello everyone and welcome back. My name is Greg Furman and this is the Vantage Point AI Market Outlook for the week of July the 14th, 2025. Now, to get started this week, we're going to do things a little bit differently here. A signal in Vantage Point is starting to form around the US dollar. So what I've done is split the screens, brought all of our markets in here because again, this is an outlook, not a recap of something that's already happened. So the dollar currently, using the UUP ETF and the Vantage Point software, with the starting the new quarter. Now, what I can tell everybody is that in most cases, not all, that the dollar is not strong in July, but we are in the U.S. fiscal fourth quarter that ends September 31st, and this is in most years, that's the strongest the dollar is. So as you can see, it's starting to form a different signal here. The current quarterly opening price coming in at 26.83. As long as we're holding above that, then that seasonal pattern of dollar strength into August and September is potentially underway. Now, the UUP is down 9.18% on the year. This is probably the worst performance the dollar's had going back 30 years. So again, that's not a reason to buy it. But if the signals in Vantage Point are supportive of that, then we would look at that. So our T-cross long, 27.13. Now what we want to do is say, okay, we have a very clear line in the sand, 26.83, and our T-cross long at 27.13. If we can continue to advance from these levels, how is that not only going to affect the Forex pairs, but the equity markets and the commodity markets? So looking at the SPYs right out of the gate, the SPY is in a different picture here. The dollar is well below its yearly opening price, 29.15. But the SPYs are firmly above their yearly opening price. Now, I would argue there's been a significant period since November 2024 where these two have been positively correlated, not just the standard inverse correlation that obviously is still there, but they can move up together at the same time. And if that's going to happen, it would be between basically now and October 1. So for now, our key level on the SPY, we want to look at that quarterly opening price at 616.36. That is a key level. Then we move down from there from our T-cross long, 614.79. If we can hold above these two levels, then the equity markets can still advance even with dollar strength. Now, Monday we'll see no shortage of volatility yet again, guys, because tariffs going against everybody. So we'll see how this one plays out, but expect a very rocky start for the equities on Monday. But as long as we know these key levels, then we can trade them. So again, I will point that out. It is possible for them both to move up, but I will also concede largely there is still an inverse correlation. Now, when we look at the global equity markets, more specifically, the Global X DAX ETF, then this one is very interesting also because you can see, once again, as the dollar is moving lower, the DAX, that is fueled DAX strength. So if the dollar, or when the dollar moves higher, as we start moving towards September, then the DAX is far less attractive to us at this time of year. So our quarterly opening there is going to come in at 44.56. Our T-cross long, 44.83. The DAX, without a doubt, has been the better play. But now that could be running out of steam, and that could also affect the euro currency, which I'll talk about in a minute. But the main thing is that we identify these core levels. If we break down below that, that will confirm the dollar is going to be fueled again with real demand for U.S. dollars, despite all the tariff nonsense and all this stuff. Is somebody required to buy U.S. dollars? I would argue yes, they are in the U.S. fiscal fourth quarter, which we have now just entered into. Now, how will this affect how will the VIX play into this? So we want to watch this VIX very, very closely here on the ETF side. The calendar yearly opening price, 44.21. we are now opening below the quarterly opening price. So this is suggesting that the VIX is getting ready to move lower, but there could be a new trend starting here, guys. That's what I would warn of, because the VIX has done very well this year, but that could be coming to an end. And I believe a lot of that is coming from hedging with the uncertainty with these tariffs. So again, when we look at it throughout the calendar year, the VIX has had some very big spikes, but here's the thing. If you believe that this is a buying opportunity for the VIX, then this would be the level at 44.25. So again, if we can hold above this, but always remember, in this quarter, we have to get above that quarterly opening price at 47.25 if we're going to see this advance. Now, with Bitcoin here is another one that's very, very interesting. We've had a big push up, and the seasonal pattern, at least for the last 5 years, does support this strength, but I firmly believe we will have a sell-off before the real move happens, which is in September and October. But again, I could very well be wrong, and that move could be underway right now. In most cases, the Bitcoin against the US dollar goes in 3-year cycles, guys. If you look back at the performance of Bitcoin, 3 years up, 50% down, 3 years up, 50% or more in a down year again. So right now, I will warn everybody, we're in the 3rd year of that very same 3-year rally. And if it's going to sell off, or if it's going to have a corrective move, it would be by the charts and by its own performance, if you're tracking it, would be 2026. So we'll watch it into the year end. But for now, I would advise caution, extreme caution buying it up here. Because in most cases, they'll flush the market out before the real move occurs. And I'm pretty confident I know when that's going to be, which is September through October. It's the same every year, guys, when you look at the charts. But this year is a little bit more ominous, so be careful. But our main level with the VP level, our long predicted, which is only a moving average. This is not a standard moving average crossover, just the predicted moving averages. 113,885 is our long predicted. 110,296 is our T-cross long, which is a major pivot level. If we break either way, guys, in my respectful opinion, that's our retracement point. If that can hold, we've got the additional added protection of the quarterly opening price at 107,598. But I can't rule out a retest of 93,804 before the end of the year, the current calendar yearly opening price. But just on a side note, no live prices being quoted here. I'm just talking about the pivot levels, quarterly opening, yearly opening, just to avoid any confusion there. So when we break down that side of the trade, then I'm also going to bring in the commodities here, which again is very interesting, this particular trade setup. We can see that oil and the US dollar largely have a very, very high correlation. Now, the war between Palestine and Iran and Israel, the U.S. jumping in causes a spike in oil, but the dollar did spike. But you'll notice here is something that I want everybody to see, that oil started moving lower with the dollar. They reconnected to each other. So starting the quarter right here, you can see that oil and the dollar are rising together. The ETF here, which is very fascinating how Vantage Point has moved towards these ETFs. And when I do a comparative analysis, which I will in a moment, with the actual dollar index, I would argue there is less lag in the actual UUP ETF. Is it possible that the ETFs are weeding out that false price from the futures market in the Asian market and in the London and European markets, and it's focusing more in the US session? That's entirely possibly. And that price in those markets is causing distortion. I've seen that very clearly with the DAX. I showed it about a month ago, how the DAX ETF did not break below its calendar yearly opening price, but DAX futures did. So that volatility there, if we look at this right now, I would say that there is a very strong positive correlation between this. So if oil right now, USO, is just breaking above its yearly opening price. That's at, again, the yearly 76.84. And now the very important quarterly opening price at 73.61. So looking at these charts, the performance, the correlations, I would respectfully submit that if the dollar can break higher, as we start moving higher, oil will likely do the same. So this will be a very interesting play. But if we look at the actual dollar index itself, we can see that the dollar index is struggling a little bit here, while the UUP ETF is giving us a clean signal. Now they're both down almost exactly the same. One is down 10.94% on the dollar index, and the ETF approximately 9.18. So when you're trading the UUP, it is the same trade, but the performance is what we have to look at. So again, the dollar index itself is slowly rising up here, but I would respectfully again submit that the ETF has far less. So again, that very small lag time here can be an early entry point too for signals. But again, when we look at that dollar index, it is holding behind the actual ETF. So that is something to watch, and I will update from time to time. Now, when we look at some of our main Forex pairs, before we do, we also want to have a look at gold here using XAUUSD. Now, this one is very interesting. Not a lot of buying up here over the last, probably the last month, month and a half. There is solid buying from the monthly opening price, but the signal is getting a tad weaker. Now, with the more tariffs coming in, that's likely going to boost gold. But the bigger rally in gold usually is in mid-October through mid-January, once we get past that seasonal period of U.S. dollar strength. So we could see this pushed lower here, but we are holding above the quarterly opening at 33.03. The monthly, obviously, that's going to be the same price this month. The yearly 26.07. So I don't think we're going to have that deep of a retracement. There's more than enough fundamentals to keep gold firm. Just always remember the inverse correlation between gold and the US dollar. That doesn't always stay the same. I've seen, particularly in August, September, and October, in conditions similar to these, I've seen the dollar and gold both go up and down together. So watch the key levels here right now, but there is still a bullish tone to gold, but the dollar likely won't overshadow that too much at this particular time. Now, when we look at our main Forex pairs here, we look to see which pairs are above the T-cross long and which pairs are not. I've already scanned through them, and it's approximately between 52 and 62% favoring, if I work in the UUP, favoring dollar strength this week in the Forex market. Now, again, we're at critical levels here, but the main one we would watch would be Euro US. Now, what I personally find interesting about this, respecting the fact there's a 99.999 inverse correlation between the dollar index and Euro US, Euro did not break down below its T-cross long at 116.70. So what I will respectfully, again, submit for the beginning of the week, that is the key level to keep your eyes on here, guys. Now, if we look at our quarterly opening price, we're running right along it. We have not been able to get above it so far, but in most months, it's actually in the middle part of the month where the dollar's a little bit softer. So we could see a bounce on the euro. But the UUP is saying a long is building here, which means a short Euro US. So keep an eye on that critical level. And if you are shorting it, make sure your stops are above the quarterly opening price at 117.87, or allow the market to come higher potentially on Monday and set your shorts closer to that area. But again, we will have another very volatile start to the week. Now, when we look at the British pound, it is broken down already below its T-cross long. It did very poorly right out of the gate. The quarterly opening price, second day of the month, it pushed lower. So for next week, again, this is all of your G7 pairs are based around the dollar index. So that T-cross long, That's going to come in at 135.96. And then we have our quarterly opening at 137.33. So we'll watch these areas right now. But again, the minimum area you would look at a short would be up here at the long predicted and the T-cross long. They're both now at the exact same level. So our resistance for the week, we'll just round it out and say 136 if you're going to short. Now, again, if you're shorting, you want to make sure you're not getting tagged out between the T-cross long and the quarterly opening at 137.33. Now, the Aussie continues to buck the trend, even with the dollar strength. It's pushing higher, but you can see on Friday where it's failing, right at that quarterly opening price, 65.81. So if we enter into a big risk-off market, which I think we will, off the open tonight, with all these tariffs being hit with the European Union, I think it's going to be more of a risk-off environment, and this could hurt the Aussie. So be mindful of that. But if you're buying up here, then it would be advised to be cautious around 65.81, because if it's going to fail, that's where it's going to be. The T-cross long is providing our support for us and buying opportunities this past week, 65.38 to start the week. I do anticipate we will test that level, but the main thing we want to look at is the dollar strong across the board. The answer is no, it's actually not. It's on a very select pairs. So keep a very close eye on that one also. The dollar yen is trying to push higher again, but a risk-off scenario, in my respectful opinion only, would favor the yen more than the dollar. But the time of year that we're in, when we look at it, the dollar yen, this is the polar opposite year it's having with respect to last year. We are well down on the year. So again, a retracement higher is perfectly normal. We've got some very stiff verified resistance at 148.65. So again, this could be another area where real money, whether they want to or not, they have to buy US dollars. This also is fully supported by the carry trade, at least for now. But I believe we have the US CPI coming out next week. If that's a hotter number, then the Fed is saying he's not going to cut, then that favors a long actually here. And you're in a period of coming into a period of known US dollar strength. So again, watch your quarterly opening, 144.04. And we've got our T-cross long at 145.29. So if you are so inclined to buy this, it's going to be between 146.16 and 145.29, because again, this is an outlook, guys, not a recap of something that's already happened. We want to target levels to buy and sell from going into the next trading week before it starts trading, not after. Now, when we look at the again, the US Canadian dollar, now US, again, tariffs are back on the table. I think 35% for Canada, August 1st. So as you can see, the Canadian dollar is being affected by that. The US-Canadian pair pushing higher. The key levels to watch again on this one going into next week, the quarterly opening, 136.08. And again, then we layer in our VP indicators, which are, again, sitting just below that. That's going to be 136.69. And we've got, again, the T-cross long, 136.69. So right now we've had a pretty strong close, 136.90. So again, I think longs are reasonable while above 136.08. I believe we can possibly break down below the T-cross long or the long predicted in choppy Monday trade. But again, risk off does not favor the Canadian dollar, but higher oil prices do. So keep an eye on oil. But again, the Canadian dollar doesn't have the luxury of riding piggyback to the US dollar economy anymore, or we're not sure where we're going with the tariffs. So it could be problematic for it, to say the least. Now, even if we look at the US Mexican peso here, I believe that the T-cross long will be challenged next week, 1879. Watch for a potential break of there. But the main thing here, guys, is we want to look at all of the Forex pairs together and count which ones are above the T-cross long, which ones are not. So it slightly favors the US dollar going into next week's trading. Like I said, between 52 and 62% bullish on the dollar. But remember, the dollar is still in a very significant downtrend. And again, with the Kiwi, sorry, I think I missed that one. That one is already slipping below the quarterly opening and the T-cross long at 60.31. So there's a number of things pointing to dollar strength coming, but it will be a very choppy week. So with that said, this is the Vantage Point AI Market Outlook for the week of July the 14th, 2025.